1. What exactly is a tax haven? A tax haven is essentially a country or territory that offers extremely low or even zero tax rates while also promising financial secrecy. These two features make them magnets for wealthy individuals and corporations who want to reduce their tax bills or keep their financial activities away from prying eyes. Places like the Cayman Islands, Bermuda, and the Bahamas have built entire economies around this model. In Europe, wealthy hubs like Switzerland, Luxembourg, and Monaco play similar roles. Even certain US states, such as Delaware, operate with tax haven-like qualities. The idea is simple. By parking your wealth in these jurisdictions, you can legally pay far less in taxes than you would at home. 2. Why do the rich use them? For the average person, taxes are straightforward. You earn a paycheck, pay your income tax, and maybe deal with sales tax when shopping. But for the wealthy, income comes from many different sources: businesses, stocks, real estate, intellectual property, and more. When you're dealing with tens of millions or even billions of dollars, even a small percentage saved on taxes can add up to staggering amounts. For example, if someone earns $50 million a year, avoiding just 5% in taxes translates into $2.5 million saved. That's the cost of a luxury home simply gained by rearranging finances. This is why the rich and powerful are motivated to use tax havens. It's not about pennies on the dollar, it's about protecting massive fortunes. 3. Offshore shell companies. One of the most common tools in tax havens is the offshore shell company. These companies usually exist only on paper. They don't actually conduct real business in the country they're registered in. Instead, they act as a shield for profits. For example, a celebrity could route their endorsement deals through a shell company in the Cayman Islands. On paper, the company earned the money, not the individual, which means the tax owed is based on the Cayman's near-zero tax rate, rather than the much higher rate in their home country. While it may sound shady, this practice is often perfectly legal, which is why it's so widespread. 4. Trusts and foundations. Another powerful method is the use of offshore trusts and foundations. By transferring assets, such as stocks, real estate, or artwork, into a trust, wealthy individuals can technically say they no longer own those assets. The trust owns them. This has several benefits. It shields the assets from estate taxes, protects them from creditors or lawsuits, and makes it extremely difficult for tax authorities to figure out the true ownership. In many tax havens, these trusts are protected by strict secrecy laws, adding another layer of protection for the rich. 5. Profit shifting by corporations. Big corporations take things even further with a tactic called profit shifting. Imagine a global tech company that sells products mainly in the US. Instead of declaring those profits in America, where corporate tax rates are higher, the company routes them through a subsidiary in a tax haven like Bermuda or Ireland. On paper, the Bermuda office is wildly profitable, while the US branch is barely making money. The reality, of course, is that the US is generating the real sales, but clever accounting ensures the profits are taxed at the lowest possible rate. This is one of the main reasons some of the world's biggest companies pay shockingly low taxes, despite massive revenues. 6. Banking secrecy. Banking secrecy has long been a cornerstone of tax havens. Countries like Switzerland were once famous for offering anonymous bank accounts that made it nearly impossible to track who owned what. This allowed the wealthy to hide billions of dollars out of sight of tax authorities. Although international pressure in recent years has forced some countries to relax their secrecy laws, loopholes still exist. Many havens continue to offer private banking services that keep ownership hidden through layers of shell companies and legal structures. For the rich, it's less about having a vault of cash hidden away and more about making their money invisible on paper. 7. Residency and citizenship programs. Not all tax avoidance involves complicated accounting. Some wealthy people simply change where they live, at least on paper. Countries like Monaco, the United Arab Emirates, and the Bahamas offer residency or citizenship with little or no income tax. By establishing their official residence in one of these places, Wealthy individuals can dramatically cut their tax bills, even if they spend most of their time elsewhere. For example, many Formula One drivers base themselves in Monaco, not just for the lifestyle, but also because it saves them tens of millions of dollars in taxes each year. 8. Famous examples. The world got a clear look at the scale of tax havens during the Panama Papers leak in 2016, which exposed how political leaders, celebrities, and business moguls used offshore companies to stash wealth and dodge taxes. Another case was Apple's tax arrangements in Ireland, where the company was accused of funneling billions of dollars through subsidiaries to minimize taxes. The European Union even ordered Apple to pay back billions in unpaid taxes. Celebrities and athletes are also frequent users of havens. Many have set up offshore companies to manage royalties, investments, or sponsorship money, all while keeping their public tax bills surprisingly low. 9. Why governments struggle to stop it. If tax havens are draining billions from national budgets, why don't governments crack down harder? The answer is complicated. Small nations rely on tax haven status as part of their economic model. It attracts foreign money that supports their local economies. Wealthy individuals and multinational corporations also have enormous lobbying power, which allows them to influence tax laws and regulations. On top of that, many of these practices are technically legal. They exploit loopholes in international tax systems rather than breaking laws outright. Finally, globalization makes money incredibly mobile. If one country closes a loophole, wealthy clients can simply move their money to another haven that's still open for business. 10. The real cost of tax havens. It's easy to see tax havens as just a tool for the rich, but they have real-world consequences for everyone else. Governments lose hundreds of billions in tax revenue every year due to offshore schemes. That's money that could have been used to fund hospitals, schools, or infrastructure. The shortfall often gets passed down to ordinary taxpayers who end up shouldering a larger share of the burden. In the bigger picture, tax havens widen the gap between rich and poor. They make it possible for the wealthy to grow even richer, while average citizens see fewer public services and higher taxes. 11. The future of tax havens. The fight against tax havens isn't over. Global organizations like the OECD have been working on measures to improve transparency and push for a global minimum corporate tax rate designed to prevent companies from shifting profits into low-tax jurisdictions. Some countries are now sharing tax data across borders, making it harder to hide assets. But despite these efforts, tax havens aren't going away anytime soon. Wealthy individuals and corporations continue to find new strategies, and small nations will always have an incentive to offer favorable tax laws. The system may change shape, but the basic idea will likely remain for decades to come. Tax havens might sound like a niche financial topic, but they reveal a bigger truth about global inequality. They are legal loopholes that allow the rich and powerful to keep more of their wealth, while everyone else plays by stricter rules. For billionaires and corporations, tax havens are not just about saving money. They're about controlling power, protecting assets, and staying a step ahead of the law. For governments, they're a constant source of frustration and lost revenue. And for everyday people, they're a reminder that the financial system doesn't always play fair. Understanding how tax havens work gives us a clearer picture of how wealth really moves in the modern world.